I think we got to start with the futures. Are you surprised that the reaction isn't bigger in the futures market?
No, because earnings are holding up. S&P 500 earnings are up 10% year over year, and NASDAQ 100 earnings are up 34% year over year. And in this context of U.S. exceptionalism, look at what's happening in France today. So you still have strength in the U.S. market that can be resilient in the face of some of these headwinds.
Right, by the way, for people just joining, the French Prime Minister called for a confidence vote coming up in September. That's weighed on the broader European markets. The CAC's the biggest laggard. I want to go back to the U.S., though. We're really focused on the U.S. today. What do you think this could potentially mean for the idea of Fed independence and American exceptionalism, as you just mentioned? Part of the American exceptionalism narrative is that we have an independent bank that makes decisions based on data and not necessarily on political motivation.
I think the relative muted market reaction tells all of us that we're still in pretty good shape with respect to Fed independence. But look, you have to be careful of what you wish for. Even just this little whisper of a little bit of deterioration of that is selling off the long end of the curve a little bit. You have to remember that the Fed only controls the short-term lending rate, and if you lower that too much, you get a steepener. It already happened the last round of cuts resulted in higher longer-term interest rates.
Yeah, we were showing the kind of the spike in the 2- and the 10-year curve, as you mentioned. The Fed has the biggest influence over the 2-year, which actually moved down about 7-8 basis points from the level we saw yesterday. I want to get to your word of the day. It's small caps. Your pick for us today is the ITWO ETF. It's the Russell 2000 high income ETF, so a small cap income focused ETFs. Is this a pick based on the idea that we're going to continue to see rate cuts or at least pressure on the Fed to cut rates, which would benefit cyclicals and small caps?
Yeah, this is two parts. So first, there is room for the Fed to do 2 or 3 cuts and not really impact the long end of the curve, because that's still consistent with even 3% inflation. And that will benefit small caps better than large because small caps are more leveraged and they have shorter maturities. So that's part of it. The other piece is now you're going to have lower rates on your money markets, more challenges from income from interest rate and bonds. Better to get some equity income, and that's the story.